VIP Industries, which reported their number as well. And stable quarter and stable performance is surely coming in for the company. Capex is on their radar as well. Let's bring on board Anindya Dutta, the Managing Director at VIP Industries, to talk more about the numbers, the demand environment, how is that shaping up as well. Anindya, thank you so much for joining with us on ET Now. And obviously, my first question is going to be on the overall demand environment. Finally, obviously, we're seeing a pickup coming in. Could you give us an understanding in terms of, what is the demand trend, especially with the travel resumption as well as wedding season? How did that support your growth? And in terms of segment-wise also, the both premium versus mass, metro, non-metro, where were you seeing the demand trends coming in from?
Yeah, surely. Thank you. Thank you for having me over. Yes, the demand, finally, the demand situation looks quite conducive, quite good. We are seeing domestic travel as well as international travel back in full swing. So that's working for us. Marriages and spending in marriages is also back. We also saw a lot of student travel happening across within the country as well as outside the country. That also kind of led to consumption of our products. Your question on which segment is growing, the value segment or the bottom of the pyramid is growing much faster than the mid and the premium part. I think it's also getting fueled with the unorganized sector having higher headwinds, and that's kind of adding to the growth of the organized sector. So by and large, overall, we're feeling good about the growth environment that we are witnessing right now.
About the demand environment, does that mean that this 32% kind of revenue growth that we saw in the quarter gone by is sustainable, or at least 25% and above?
Well, yes, part of this demand is a little bit of pent-up consumption that is happening now by purchase of luggage. When you come back to travel after a gap of 2.5 years is something that's happening more than what we would see going forward. But the underlying fundamental demands from the cohorts that I spoke about will continue. And I think we will have to see what exactly growth rate for us results into that. But yes, in that order of magnitude, 20% around that should be a feasibility.
Right. 20% is doable, but what about margins as well? There was an indication coming in terms of the gross margins of around that 50 to 55% range. Currently also, yes, you're very absolutely near, just a thread away from that mark of 50%, 49.4%. What is your expectation in terms of margins? Will you be able to reach that level anytime in Q4, or is the longer wait for the gross margins then?
No, I think Q4 would be difficult to get to that level, but in a slightly longer horizon, improving from where we are by about 2 to 3% is quite possible. In fact, we'll have to see how from last quarter to this quarter we have shifted by about 130 basis points as far as margin is concerned, and this is happening on the back of overall commodity softening that we have experienced in the last couple of quarters. It's starting to play in our business just about now. So with all that, I think inching upwards to about 51-52% in if not the immediate quarter, but thereafter should be quite a feasibility.
51-52% at least by Q1 FY24 is what we can target, and EBITDA margin of 18 to 20% what you had earlier indicated somewhere in FY24. But quickly before we let you go, if you can talk to us about your capex plans as well. We know in FY23 what you had outlined, but what about FY24, and how's that entire ramp up happening for the Bangladesh facility?
So I think in this current financial year, we would end up investing almost 100 crore in capex in building out capacities itself, and this is quite a new for VIP Industries because we haven't been manufacturing or investing in manufacturing prior to this. And I think an order of a similar magnitude will continue in the coming financial year because we are trying to grow our own manufacturing share within our business, and also we got to fuel the growth for the future. So we would be investing in capex to that magnitude in the coming year.
Okay, Anindya, thank you so much for giving us your time, joining with us on ET Now as well. It's a pleasure having you on the show. That was the management of VIP Industries for you all. Surely seeing a recovery in terms of the demand. Yes, gross margins, maybe we'll have to wait for Q1 FY24 to see them coming to that 51% level as well.